Okay, welcome to the Swing Trading with Cycles channel. This is where we time the market without predicting it. We're going to look at crude oil stocks, so some energy stocks here. We'll start with crude oil itself. This is WTI, so oil more correlated with U.S. production. And so we'll start with the daily chart, and we talked about this in the last update. As always, take a look at the link in the description. And also, if you're not following on Twitter, you can see a link for that in the description as well, to get more sort of smaller updates. We made a high for this daily cycle on day 10. Then we declined down to this low on day 16. And so we're just marking that, right? So like think of it as this is a 10-day rally. This is a 6-day decline. This is still a higher low, right? Like you have this little higher low, this high, this is a higher low. This is okay, theoretically, right? Here's the problem. We then rallied from this swing low, right? Once we went above the high of this candle, we then rallied to day 30, so call it another 14-day rally, right? From day 16 to day 30. And now, as of yesterday, we had this massive swing high. So below the candle that marks the high, so that is below $90.45. That's a swing high. So that makes Monday, November 7th, a swing high, right? And this is Wednesday, November 9th, right? So we had a big swing high yesterday, Tuesday, and then what did we do today? We had big follow through, another lower low, right? So this is a lower low than this, and then this is another lower low. So at some point we're going to get a bounce. If we are starting a downtrend on the daily chart though, right, which it appears that we are, we would expect that that bounce is going to end as a lower high, right? Something like that, right? And this level here that I've marked, that 82 level, is really just right where that swing high on day 16 is. You imagine we're going to retest that level, and it's a question of does it hold or do we sort of melt through and then test this swing low here. That's how it works, right? You start taking out swing lows when you start to make a downtrend, in the same way that if we start an uptrend, we need to take out these swing highs. It's all about swing lows and swing highs at the end of the day. So as you think about what the cycle count is, right, this would be a really short cycle at 16 days. So you could just call this one big cycle, right? And so this is day 32. It doesn't really matter. What we're watching for is the price action. This has the look of a double top, right? This day 10, day 30 thing, like, uh-oh. And so you'll see what that looks like on the weekly chart. It's very telling, right? You can see the two peaks, right? Boom, boom. Again, you're double. So like we had this big rally. And what I'll also point out here, and this is something that's happening in a lot of asset classes. You had one big week, that was the week of October 3rd, and now the next 5 weeks since then have been consolidation inside the range of that week. So that week of October 3rd, the high was $93.25, and the low was $79.67. So as long as we stay within that range, right, so between 93 and 79 essentially, which is a pretty big range, we're just consolidating in here. Now, this move, this red day, and then of course we have the CPI number tomorrow. That's the biggest thing of all, the biggest catalyst. You would expect that we're trying to make a move down to test that 79 area, that low there. Obviously, the other side of this is 93. It's a question of which side of this do we come out on, and we're now obviously favoring the downside. And one thing that we've been talking about is this idea that we are declining into the 3-year cycle low, this being the 3-year cycle high in March, right? And this whole thing has just been a decline, down into that low. There's a potential that September was our low. It could form a swing low here, but we're now starting to fail. That's the other thing to be aware of. Did this make a higher high? So 93.73. Yeah. So this made a slight higher high. So this November candle is setting up to potentially be a bearish outside candle of October. That would be pretty ugly, right? That would take us to, below that 79 level. Like, so it's all correlated. Speaks to the multiple time frame analysis. So now let's look at so that's what oil is doing. What we do know is that some energy related stocks had actually been moving much more bullishly, even while oil was declining like this, right? Some are making all-time highs, right? Even while we've had 4 months in a row that were red for oil earlier in the year. So let's look at some of those names, the same names we've looked at in previous videos. So we'll look at VLO, and we talked about this. This is the same thing that everything is doing. you have to think about how long a rally has lasted. And so if this is our key swing low, I hope you can see that. We just had our high on day 32, right? And that was today. And we obviously reversed pretty violently, so we made a bearish outside day. That's really long for a daily cycle. And so you have to imagine we're moving into a daily cycle low at some point, if not now. And truthfully, this looked like it was probably a daily cycle low, a daily cycle high. So the daily cycle high starts to decline. It's the daily cycle low. And definitely take a look at the Cycles 101 content if you're not familiar with these terms. So it looked like that was potentially one on day 23. Of course, we recovered and then kind of chopped around here and then made this kind of slight high. So this is certainly not the time to get in if you're not already. But some of these look better than others. And so again, look at this weekly structure this looks very vulnerable to a big move down. So last week, that week that's kind of holding everything up for VLO is the week of October 17th. And the low on that week is 115.34. So you have to think that level is in play. You have to protect that downside. And the monthly hasn't gone red yet, but certainly heading in that direction. That's important to know about. XLE just today confirming a swing high. Wow, a big down day, kind of gap. Yeah, it was a gap down. And this is, you would imagine this is probably the beginning of your daily cycle decline. Doesn't mean it has to be an ugly decline. So yeah, it's day 32. So we're really long in the daily cycle. That said, oil names tend to be a little bit erratic in how long their cycles are. But that's the point. I always say it's price action first, cycle second. If something has been rallying for 32 days, making higher highs and higher lows, at some point it's going to have a pullback, right? Like capital is limited, right? So if you look at the monthly chart, again, this is XLE. I mean, look at this. We just went red. That's what you expect to start happening to many of these names. That's a big sign. When you go red on a higher time frame like this, like on the monthly, that's bad news bears. So you want to be careful. But of course, it's all about the CPI tomorrow, and that's really for all markets, not just energy. It's for the Dixie, for metals, for broader markets. Crypto is obviously melting down kind of onto its own. I'll see if I have time to do a video on that. But caution is to be warranted here. The other thing you want to think about, and we'll stay on XLE for a second here, is the idea that this was a weekly cycle low. That puts us at week 1, 2, 3, 4, 5, 6, right? And so we're about to print a bearish outside weekly candle on week 6 of a weekly cycle potentially. That implies that we could decline for many more weeks from here if this is the top of the weekly cycle, right? If we're topping out on week 6. So that's important. That's something that requires caution. And we'll look through the rest of these names. Same kind of look for XOP. That's dangerous. Monthly has gone red as well. XOM, that's something that just made new all-time highs. Same exact pattern. Bearish weekly candle. Doesn't mean we're definitely going to get a multi-week decline, but that's what the odds would favor, especially if we get a negative reaction from equities in general. Route 66, or Phillips 66, I should say. I mean, look at this. We actually had our swing high like 5 days ago, and then we made a lower high kind of move here. You can kind of draw a trend line. Again, this is the daily chart that I'm looking at here, right? You see, that was your swing high. Once we went below this low, this was all been consolidation here. We tried to make a move up here, failed pretty badly. And so all these names are setting up for a pullback. And again, the broader market is going to have a decisive moment tomorrow at 8:30 a.m. OIH, another ETF. They're all doing the same thing. Daily swing high either today or in some cases 4 or 5 days ago, which is really mucking up the weekly chart, which is turning the monthly candle red. Not a good look here. But some are doing much worse than others, and I'll call this out. Look, same thing for ConocoPhillips. Devon Energy. Ugh, look at that. This one, like, if you want to think about like the name to not be in, this is the one, right? Look at why. This is your daily chart, and look what just happened. We have this swing high from all the way back here. We came down, had this really ugly day. We already bounced, right? And this is what we got. We got our lower high already. And now we're making a lower low. So we're setting up at some point another lower high, another lower low, etc. If you look at those other charts, those other ones just broke down. This thing has already broken down and is just breaking down further. You have to imagine this level is in play. So I'd say get out. I mean, I'd say this is the one to avoid in terms of relative strength in the sector. That looks like it's maybe going to take a little bit of a beating here. And if we look at Marathon, same kind of thing as most of the others. Swing high a couple days ago. The monthly just went red. And again, these are all doing a similar thing. Not necessarily. And I'd say just in general, this is the kind of market where being in cash is not a bad option. I mean, now it's actually paying some yield, obviously below inflation, but better than putting your money in something that's going to go down 5, 6, 7% in a day, potentially. Not financial advice here, obviously. I'm just talking about the charts. They're all doing the same thing. Big swing high on the daily, which is causing a bearish outside candle on the weekly, which is causing the monthly to go red. And in many cases, it's starting the potential for a monthly bearish outside candle. That is all to say this does not look good. And what we would need is a violent bullish reversal, which we could get. CPI is exactly the kind of thing that could flip things around. It's a big catalyst like that. But we're going to have to see what we get, of course. So that's your rundown of energy stocks. That was a smattering of names. So we looked at Valero, we looked at XLE, XOP, XOM. We looked at Phillips 66, OIH, ConocoPhillips, Devon Energy. That's the one you want to avoid. Marathon Oil, and finally Chevron. All really doing the same thing to different degrees of bearishness. Thank you for joining us.